In this week's market update, President Trump is in town, India anticipates a rate cut, the FTSE 100 gets a reshuffle, and Britain becomes a little greener. Yesterday, the US President Donald Trump and his wife touched down in London for a 3-day state visit. This week we can expect plenty of pomp and ceremony along the way, and no doubt some controversy thrown in for good measure, as they meet politicians, business leaders and the royal family to discuss, amongst other things, trade, defence and climate change. Described by one commentator as a divisive president visiting a divided country, this visit, which is expected to cost more than £18 million, will culminate in a commemorative event in Portsmouth on Wednesday to mark the 75th anniversary of the D-Day landings. As trade tensions have intensified between the US and China, this visit comes at a time when stock markets are closely watching the president's next move. So far, the markets have held their nerve as a tit-for-tat trade war between the US and China has escalated. But now the president has turned his attention to Mexico. On Friday, the president announced that tariffs on all goods coming from Mexico would be introduced until the country curbs illegal immigration into the US. From the 10th of June, a 5% tariff would be imposed and would slowly rise to 25% until the illegal immigration problem is remedied, he said. The main US share markets closed lower on the news, with car makers particularly affected, such as General Motors, whose shares fell over 4%. Mexico is the single biggest source of parts and engines for the US vehicle sector, importing some $128 billion worth of products. Car manufacturers in Europe have also been hit hard by the news, with shares in Renault, Volkswagen and BMW suffering as a result. This comes at a time when the motor industry is already under extreme pressure as it tries to transition away from combustion engines to cleaner, greener electric ones. Closer to home, talk of a potential trade deal between the US and the UK, once it leaves the EU, has already begun, as US Ambassador Woody Johnson said over the weekend that every area of the UK economy would be up for discussion. Speaking on the BBC's Andrew Marr show, Johnson said all things that are traded would be on the table. Asked specifically if that meant healthcare, he said, "I would think so." This was met with horror by opposition politicians, fearing the NHS could be up for sale in any trade deal with Trump. Politicians on all sides will be listening to Trump's comments this week for any clues on what a potential trade deal could look like. In other news, India has lost its spot as the world's fastest growing economy after it grew more slowly than expected in the first 3 months of the year. Official data showed the economy grew by 5.8%, which is slower than the 6.4% growth reported by China over the same period. This is the first time in nearly 2 years India's growth rate has fallen behind China's. Prime Minister Narendra Modi, who has just secured a landslide re-election victory to lead the country for another 5 years, will be under pressure to address this slowdown. The Reserve Bank of India are meeting to discuss interest rates this week, and it is widely expected there'll be a cut. We can expect an announcement on Thursday. Back at home, on Wednesday we'll know the results of the latest FTSE 100 reshuffle. Each quarter, the league table of the top 100 London-listed companies gets a reshuffle based on the closing prices on Tuesday evening. Budget airline EasyJet is poised to fall out of the FTSE 100 after 6 years, while high street retailer JD Sports is widely expected to get a promotion. According to the rules of the FTSE Russell Reviews Committee, FTSE 250 companies that would make 90th position or above in the FTSE 100 based on their market size get promoted. Conversely, FTSE 100 companies that have fallen to 111th position or worse are demoted. EasyJet has struggled with a sustained period of higher oil prices, along with a weak pound making holidays abroad more expensive, plus Brexit uncertainty halting people's travels plans. JD Sports, unlike its retail peers who are struggling at the moment, has tapped into the growth of athleisure clothing and has managed to successfully increase both its sales and share price, meaning the company is close to a capitalisation value of £6 billion. Cinema chain Cineworld and Alton Towers owner Merlin Entertainment also stand a chance of promotion. Cineworld's possible promotion is really as much about the company's purchase of the US chain Regal Entertainment in 2018 as it is about the continuing popularity of cinemas. In March, the company announced a doubling in annual profits and significantly raised its estimates for integration benefits this year. Cambridge-based engineering and industrial software firm Aveva also stands a chance of promotion. Investors in Aveva have done well since the company completed its merger with Schneider Electric's industrial software business a year ago. The deal saw Schneider contribute software assets to Aveva and a £550 million payment to shareholders in exchange for a 60% share of the combined business. Other companies at risk of dropping back down to the FTSE 250 include the takeaway ordering platform Just Eat, supermarket chain Sainsbury's, travel company TUI and broadcaster ITV. Marks & Spencer's, on the other hand, appears to be safe. While its market capitalisation had dipped below the level needed to stay in the FTSE 100, the retailer received a boost from a £601 million rights issue it launched last month. Investors in the company will be hoping that a tie-up to sell M&S Food via Ocado next year will provide the much-needed support its shares need. And finally, some good news. Britain has just got a little bit greener. We have not used coal to generate electricity since the 17th of May. That's over 2 weeks, the longest period since the Industrial Revolution. Once a cornerstone of our energy mix, the use of coal to generate electricity in the UK has been declining steadily. Coal now accounts for under 10% of Britain's power output, and the government plans to phase out the country's last coal-fired power plant by 2025 in an attempt to cut emissions. The electricity mix on the coal-free days was made up as 40% from gas, 20% from nuclear, 13% from wind power, and the remaining amount a mixture of solar and biomass, plus some imports from France and the Netherlands. Also, the recent sunny weather has meant on the 14th of May, Britain generated a quarter of its energy from the sun, the largest proportion yet. Let's hope we continue to get the right mix of sun and wind to see the record break past the 3-week mark.